Okay, so today has been a crazy day for me and my portfolio. I've mentioned this before. Um, I am very heavily invested in Comcast. Comcast had their earnings today. Um, they were actually pretty good, in my opinion. They beat on revenue, they beat on earnings per share. Um, they've had the best quarter that they've ever had this year, this last quarter. Um, they did excellent, right? There was just, as a matter of fact, they even guided towards the upside a little bit. The issue that they've had is that they did not add subscribers to their broadband. They didn't really have a loss, no, nothing meaningful one way or the other. Um, they didn't add, right? And I think that called into question some of the growth. Um, and that caused a big move down, like a big move down, like 8%. Even though second quarter is historically kind of a slow quarter for adding subscribers, all that sort of stuff, because people are out and doing stuff in the summer. Um, they just don't tend to, you know, create new subscriptions for broadband in the summer because they're out playing. So second quarter has historically been pretty squishy for Comcast, and it was pretty squishy on that one metric for them uh, this time around as well. That caused the stock to go down like 8 or 9% today, and I'm just sitting here going, why? Like, yeah, it slowed down. It's not, it wasn't particularly a great number, but it's not like they really lost anything. Um, I think people are just worried that, there's more competition coming for them, and as there should be in the broadband space. There's just going to be more competition in that space going forward. And I think they're seeing that happening, and they're worried that Comcast isn't going to grow as fast. And that's changing their valuation models a little bit and causing it to take a dip. Um, I think it's overly punished. I already thought that it was pretty undervalued for the last couple of months. It just came back down to basically the same level that it was at going into earnings. It started to trail up, and it basically ended yesterday right at what I was saying is fair value. So I gotta tell you, I think that Comcast is being overly punished for this earnings call today. Um, but I am personally taking a bloodbath today. But what did I do about it? First thing that I did was I sold some put options on Comcast. Again, I think that buying at such a low valuation is going to work out really well. And then I used the proceeds from the put options to, well, I haven't done it yet. I did issue a buy order, a limit order, to purchase some shares at a slightly lower price than what was currently trading in the market. Hopefully, I get those shares. If not, I'll just take the put options. It increases my selling put options. It increases my long exposure, so I'm fine with that. But yeah, the basic idea was to utilize the proceeds from the put options that I sold to buy more shares of Comcast. That's it. That's what I'm doing. I'm still bullish on the company. I'm happy to pay a cheaper price. That's where I'm at. All right. So that's the first 5 minutes of this video. let's go into what I was actually planning on talking about today, and that is leverage. So I've already hinted at one of the ways that I utilize leverage, but let's take a step back. Let's talk about leverage for a second. So typically leverage is just debt, right? It's debt in one form or another. You're adding to your liabilities column on your personal balance sheet, and what you're doing with that liability is you're purchasing an asset. Nothing wrong with that. Matter of fact, if you've ever bought a house with a mortgage, you used leverage. Housing tends to be less volatile than than say stocks, so it tends to feel a little bit safer to do that. But that's it, right? So the thing with leverage is that it increases your returns on the upside and it increases your losses on the downside, right? So it's kind of a double-edged sword. It can really, really help you, or it can really, really hurt you. Because of that, I tend to use leverage pretty sparingly. One form of leverage that I use quite often and quite extensively is I sell put options on positions, and I use the money I get from those to essentially to buy shares of companies that I like. That is another form of leverage. And the reason why is because you're creating a liability for yourself out in the future. There's uncertainty around that liability, and that creates some interesting aspects. The whole Black-Scholes model of option pricing comes into play, which includes, volatility and uncertainty and all that sort of stuff, right? So that is a much more interesting form of leverage, because you might not actually end up owing anything. The way that I utilize leverage, though, is I don't like to stay levered. I essentially use leverage as a credit card, where I'm making purchases, and then I pay it off, right? I pay it off with day job, right? I just contribute money into the account until I'm back at a zero balance, which is totally a legitimate thing to do. And the reason why is that if I see a good deal, I'm going to jump on that deal, right? And I'm going to push until I don't feel comfortable anymore with the amount of leverage that I have. And then, I'll just pay back the leverage. I'll pay back the margin that I'm using, or the debt that I'm using, because I'll say leverage because sometimes I'm utilizing options, and that's technically not debt. It's an obligation. It shows up on your liabilities. It's fine. So that's the way that I utilize leverage. Is I lever into a position, and then I make sure that I don't lever in so far that I can't pay it back in a reasonable amount of time, 1 or 2 months or so. That just gives me the opportunity to buy at a cheap price when the price dips, right? I do want to talk a little bit about the put options, though, because what is the put option? It's an obligation to buy shares of the company at a given price before a given strike date, right? that is what I am obligating myself to do. I'm obligating myself to buy at a certain price. Well, that price happens to be less than my personal valuation for the company, which great, whatever, right? So I end up buying. If it goes against me, I end up buying at a price that I like anyway. Whoop-de-doo, right? Um, the thing that I like about that, though, is that the option price fluctuates with the stock price. And if the stock price goes up, the value of the option decreases. You're basically short the option. And then you just buy it back at a lower price, right? You can actually get a negative interest rate on your obligation there, which is pretty good, right? The work you have a limited amount of funds that you are required to utilize. For example, if you did a $40 put option, you'd have a $4,000 obligation on your hands. So you've limited to $4,000, and if that stock goes to say $43, interesting numbers there. They might have something to do with Comcast. If it goes to $43, that put option goes down in price. You can buy it back, and you end up with less of an obligation on your hands. And you can actually have a negative interest rate for your debts. So I really, really like utilizing put options like that, right? And then because you paid back, you bought back the option, you no longer have an obligation. And yeah, so you can actually end up with a very nice negative interest rate debt on your liabilities, which is pretty cool. Essentially, you're just selling insurance, right? And you're paying somebody else less than what you paid to reinsure that obligation that you've initiated. So if you can do that, great. I've done it pretty successfully all year long. With the downtrends in the market, basically what I do is when volatility spikes in an asset, I sell put options. When volatility decreases, it's usually because the asset's appreciating and I've gotten in at a good price, and I can sell. I'm either getting appreciation on the asset, or I am able to pay back the option at a lower price. So that's the basic idea of how I utilize leverage. Let me know what you think in the comments. Hit the like button, subscribe, all that sort of stuff if you want more of me. All right, we'll talk to you later. Bye.